All right, friends, welcome once again. So I may have gone beyond the set time. I've always thought I should do no more than 25 minutes for each video. But if you look at the introductory video, the introduction to auditing, it's almost 40 minutes. Yes, listen, the intro is a lot. Actually, we couldn't exhaust it. So I would say invest more time on chapter 1, try to understand it. The same chapter 1, the ACCA text, so that you get a very good feel and understanding of the auditing profession. It's a good one. You love it. It's practical. It's like a storytelling. Okay. All right. We are doing audit, internal audit as a function of auditing. Okay, as one of the parts of auditing. Now, internal auditing. I have worked in internal audit when I was with World Vision International. Okay. And I work both as an integrated auditor, so not just a financial auditor, but more of a performance auditor as well. So internal auditing is quite interesting. It's a lovely area, and that's what we're looking at. I'm adapting from chapter 19 of the core text of Millichamp and Taylor's core text and chapter 9 of the ACCA text. Now, if you read chapter 19 of the Millichamp and Taylor text, trust me, it's very brief. I think it's just about 3 pages. Not one, two, three, four pages, 4 or 5 pages. But you realize that the video I'm going to show or what I'm going to present is quite detailed. It's quite detailed than the text itself. So it means it is quite elaborate, picking lessons from the other dimensions from the ACCA text as well. Okay, I share my screen from here, and then we launch into the internal audit. All right. So give me a second whilst I make this. All right, great. So internal audit, that's part 2 of the unit 1, okay? At the end of this, we want to understand the role and function of internal audit and how different is external audit from internal audit or auditors, okay? And then the role of internal audit in the public sector. I will not hint much on that one, okay? It's quite a brief one because they're looking at regularity. I'll speak on that, and as well as the one I've put asterisks there. So within the public sector, we are looking at accountability and how regularly do we report on such issues, okay? So they are not the same as in the private sector, okay? So with the public sector internal audit, 2 factors normally drives them. Most public sector organizations are funded primarily from the taxpayers' money, okay? So it has to be properly accounted for the taxpayers so that they will know that, yes, our taxes are being used for a good purpose, value for money, and they want to know how the money is being spent. So internal audits, in my home country in Ghana, we have the Internal Audit Agency that looks at the internal auditors within the ministries, departments, MMMD. So all the ministries, departments, agencies, assemblies have these internal auditors that work with them. And we still have the Ghana Audit Service. They are more like external auditors. They work sometimes with internal auditors within these agencies, okay, to ensure proper accountability of taxpayers' money. And again, this must be done regularly. So within the public sector, internal audit is looking at where we would normally audit this regularly and report these, okay. Funds which cannot be used need to be normally sent back to the treasury or reprogrammed. So they want to see whether we are really accounting for such taxpayers' funds. All right. Within the accountancy profession, I think the body which is usually responsible for training accountant with a specific role in the public sector within the UK is the CIPFA, the Chartered Institute of Public Finance and Accountancy, CIPFA. So it's also a professional body, quite credible, okay? And I love that their assessment, their exams are quite unique, and it's tailored towards the public sector. All right. So based on this, we'll not delve deep into the public sector. We'll now narrow our attention onto the private sector, the profit making. Now, we'll also be looking at options for outsourcing internal audit and any ethical issues involved. What do they have to do? Now, the status of internal audit, typically, If you look at the IIA statement on the responsibilities of internal audit, it even stems from the definition of internal audit. They said the organizational status of the IA department should be sufficient to permit accomplishment of its audit responsibilities. Now, the chief internal auditor, usually you get a CIA, should be responsible to an individual in the organization, and it could be the chairman of the audit committee with sufficient authority to promote independence and to ensure a broad audit coverage, adequate consideration of the audit report, and appropriate action on audit recommendations. When I work with the US with World Vision as the chief audit executive at a certain point in time, I was reporting to the regional director of audit. But at the same time, functionally, I was reporting to the regional director of audit. And administratively, I was reporting to the national director. But again, I had reporting responsibilities to the chairman of the audit committee to ensure your independence, to ensure you have adequate resources, and then the accoutrements to be able to discharge your work. Let's look at the differences between internal and external auditors or external audit, okay? The list, I can say, is not exhaustive. There could be more, okay? The objectives. Internal audit will evaluate the organization's risk management processes and systems of control, internal control, and then they will make recommendations for the achievements of any organizational objectives. So they are part of management, let me put it that way. External audit will only provide opinion on whether the financial statement provided true and fair view and whether proper accounting records have been maintained. That's the objective, okay? So one deals with management and working with management to ensure that control systems are working. We meet the organization's objectives. The external audit's work is not to ensure the company meets its organizational objectives, but to provide an oversight responsibility, a true and fair view report on the accounting records which have been maintained. Responsibility of internal audit is to management. Like I said, they are part of management, okay? But to external auditors, to the shareholders. How often is internal audit carried out? As frequent as possible, as regularly as possible, okay? External audit usually carried out annually, maximum twice a year, interim and then final audit. Who carries out internal audit? They are still part of the organization, okay? So they are internal staff of the company. Sometimes it could be outsourced to an external body, okay? But even with that, they are still within the management control and direction. It's the management that will specify your terms of engagement for you. Who carries out external audit is an external body. It cannot be internal personnel of the company, okay? And they also sign terms of audit engagement. The scope of internal audit covers every aspect of the company. The scope of external audit looks at the audit program, the working papers, their queries and explanations, letter of weakness, and non-reported weakness, okay? And it is usually specified in the audit engagement letter. Internal audit approach is usually risk-based. They want to evaluate the internal control systems. They want to test the systems and evaluate operational efficiencies. External audit approach is also risk-based. And then they also look at test basis on which the financial accounts were prepared to ensure the system which was used to prepare the financial statement is reliable. And they also end up verifying assets and liabilities. Of course, they will test the items of revenue, how revenue is computed, and how expenses come about. They'll test all those items as well. All right. Now, the legal status of internal audit, they report to management, whereas the external will report to shareholders, according to the Companies Act 2006. Okay, there's no specific legal requirement within the UK for internal audit, but usually most companies would use the UK Corporate Governance Code 2018, the one we have currently. For all listed companies, require internal audit functions, okay? It's mandatory in the public sector, and the CIPFA is entitled or is imbued with the competency to train these guys who ensure that the public purse is protected, okay? Now, internal audit function, they are value adding. They add value to the company, ensure the system of control is of a high quality, to ensure that the risk management processes in the company is robust enough to prevent fraud and wastage. And again, to ensure that this company complies with all corporate governance procedures. The reasons why most companies have collapsed in the past. Look at the Barings Bank story. Barings Bank could have been the HSBC of today, or the Standard Chartered Bank of today, or the Barclays Bank of today. Name them, those big banks, brands that you can mention. But because of weaknesses and lapses in their corporate governance procedures, Barings Bank is nothing to hear of. We don't even remember it, okay? So this is what internal audit functions will normally do. What is the scope and objectives of internal audit? We saw it in the differences, okay? But let's run through again. The APB's guidance for internal auditors states that the scope and objectives is to examine, evaluate, and report on the adequacy of the internal control systems at a reasonable cost. Again, the internal auditors, though they are part of the organization, must maintain some level of personal objectivity and display the highest level of professionalism. Now, they must be provided with all the resources they need by the organization, and they must develop a comprehensive audit plan within which they can evaluate and ensure that the system of internal control is working. So any good internal audit function will always have their annual audit plan. They revise it, of course, along the line. Mid-year, they have to revise it to ensure that they're actually working within the framework, some feasible framework that they can add more value to the organization. Okay. Again, the APB's guidance for internal auditors says that they should ensure thorough evidence gathering, reporting, and follow-up procedures. Usually, when the external auditors come to audit and they leave, they give their audit recommendations. It is the internal auditors who normally work with management to ensure that they follow up with these open audit recommendations and close them off. Okay. It's a good function. It's a lovely function. You work with two eyes because you are part of management, but again, you are like policing the management to ensure that value is added. Their scope, okay, they encompass every aspect of the organization: operations, compliance, financial, IT, name them. Any aspect of the company they work. So these guys are like all-knowing. They know everything about the organization, okay? So they look at the financial systems, the budgeting, the accounting system, the payroll, name them. The managerial system, strategic planning, they sit within senior leadership meetings to ensure some strategic planning. They monitor performance, investment appraisal techniques, they undertake it. HR audits, personnel audits, they do all of these things, okay? Operational audits could vary from one organization to the other, but they do. They engage in all operational activities, okay, to ensure that the entire dimensions or spectrum of the organization's operations is within their catchment area. They cover everything, okay? So it's quite interesting. Like I said, they get to know everything. To facilitate effective IA, the IA function should have sufficient status. Like I said, who do they report to? On their own, are they autonomous or they are always controlled? In that case, if they're always controlled, it's difficult for them to achieve their objectives. They must receive that appropriate level of recognition, support from senior management, give them their operating room to operate. Okay, don't always hold their hands and it's like pulling them all along. No, then it will not be effective. Again, an IA function should have a modern professional image. If possible, they should be chartered accountants so that they can maintain that level of professional recognition. They must also, like I said, operate with that necessary level of independence to ensure that their work is objective. They don't collude with any management to ensure some fraud taking place and covering them up. No, they must always be able to have some form of administrative reporting to the management, yes, of course, but the functional, so a dotted line reporting to management, but a straight line, a functional reporting to an independent body, okay, to ensure that their status is quite distinct and they have some room to operate. Again, this boils down to the point that independence is key for the IA function. They must be independent when they are reporting, independent from their lines of operation, their position independent, and their mindset should be independent. It's quite difficult if you find yourself in an IA position and you are not given the independence to work. I experienced a terrible one, and it wasn't a pleasant experience, okay? So independence is quite key to ensure the IA function operates and provides the highest level of value to the organization. The IIA, Internal Institute of Internal Auditors, statement states that objectivity is an independent mental attitude which internal auditors should maintain in performing all their audit functions. They are not to be subordinate. They are not to subordinate their judgment on audit matters to that of others. Don't let somebody control you and decide what you do, okay? Drafting procedures for systems and designing, installing, and operating systems are not audit functions. Performing such activities is presumed to impair their audit objectivity, okay? So even in this case, though they are part of the organization, drafting the procedures is not part of their work. They can give some guidance, but for them to actually take part in drafting it, no. To install these systems, no. It's not their function. It will impair their judgment, okay? You find yourself in audit, get to know all of this. If you find yourself in internal audit, get to know all of this so that you can always make a case, okay, based on guidance and professional regulatory bodies guidance which they provide, okay? Internal audit functions, you would always hear value for money, VFM audits, okay? So where they ensure that we spend less money for an activity, but we don't compromise on quality. We make best use of resources so that we can achieve our objectives. Again, we should achieve the best results in terms of our objectives. So the 3 E's, the VFM comes in 3 E's: economy, save money; efficiency, best use of resources; and effectiveness, get the best results, okay? Again, they also have best value, where they challenge, review, and question the processes which are in place. They compare what they have in place with what others are providing or with other methods. They consult the management, consult the staff, consult the externals, okay? The creditors, the debtors, consult them. And then they also complete. So 4 C's over there, compete. So look at performance management comparisons and ensure that we get the best one, which will help us achieve the best results, okay? So we have the 3 E's, value for money; 3 C's, best value, okay? And then we're looking at, they also have project auditing. If a project is to be started, they are usually consulted. They can undertake some investment appraisal analysis. Even when the project is in place, they can still do that project audit. They also look at financial internal audit, okay? In which case, their work would then be relied upon by the external auditors. Like I mentioned earlier in the first video, if you look at ISA 2610, using the work of internal auditors, it requires that these external auditors will obtain thorough understanding of the internal audit function so that when they are working, they are planning their work, they can rely on the work of these internal audit functions, okay? So financial internal audit is very key for external audit to operate. Now, if an external auditor will place reliance on the work of the internal auditors, there are a number of criteria they have to meet, okay? And these are the questions these external auditors will usually ask. Can the internal audit decide its own pattern of work, or somebody does it for them or decides for them? Is the internal audit constrained by management? They don't have the independent mind of their own, in a way that they are being denied access to certain records or being told to concentrate only on some areas of the organization. Is that what is happening? Then we cannot rely on their work. ISA 610. Does the internal audit have unrestricted access to management at the highest level? Can they go to the CEO, CFO, and talk to them, or the audit committee? If yes, we rely on their work, okay? Does the head of the internal audit have a senior management or board level position? Do they sit on the senior management team, independent of the financial director? If yes, we can rely on their work. If no, you question the internal audit function, okay? Is the potential scope of their work restricted in any way? I highlighted that. Are they free of any operational responsibilities? Are they also made to institute some procedures and measures in the organization? Then we cannot rely on that one, okay? Can they communicate freely with external auditors without being restricted? Okay, how competent is the internal audit function? Do they have sufficient trained members? Are they chartered? Are they competent? Can they carry out their work independently? Are they well-resourced? Do they have the staff numbers, the budgets, budgetary allocations, the professional qualifications, continuous CPDs that will give them the highest level of technical know-how in order to operate? If yes, rely on them, okay? And then again, they could also undertake operational internal audit. All right. Now they function across board, all aspects of the organization, okay? But the key areas we look at will normally cover the purchasing, procurement, marketing and sales, cash management, okay, and human resources. They carry their work in the same way as the external auditors. But there are some key differences, okay, like we've seen. Now, what is the process for the internal audit function? The same way. They will identify the risks inherent in the organization. They will establish controls or help management to establish controls. They will test whether these controls are effective. If they are not effective, they will modify it. If they are effective, they draw conclusions, okay? So usually the step is the same. Now, one key function of the internal audit is to ensure a robust risk management process in the organization. And then you look at the Chartered Institute of Internal Auditors, they give these caveats or these core paragraphs. I want to read them out. So an independent IA will, through a risk-based approach to its work, provide assurance to the board of directors and senior management on the risk management processes of the organization. So these assurance will cover how effectively the company assesses and manages its risks, and also an assurance on how effective these first and second line of defenses are. We look at 3 lines of defenses. One, when should the company experience any risks, it is because, one, there are no internal control systems strong enough. The second thing is that if there are strong enough internal control systems, are they being implemented or senior management override it? That's the second level. And the third level is where the internal auditors come in. So 3 levels of defense against any risk in the organization: strong internal control systems, okay. Number 2, management ensuring that it is adhered to, it is implemented. Number 3, internal audit comes in, okay. If the first 2 are good, internal audit will just be like rubber stamping all the activities. Now, the internal audit function under risk management will cover all elements of the risk management framework, from risk identification, risk assessment, risk mapping, the responses, and then communication of this risk-related information to all stakeholders. They will look at all dimensions of the organization, their short-term objectives, their ethical dimensions, their strategic goals, operational and reporting compliance. To look at everything to ensure that risk management is robust enough and wastages are taken care of. So like I said, 3 lines of defense from the IIA statement. First line, internal controls. Management will ensure that they oversee it is implemented. Third line is the internal auditors. All right. Currently, in the wake of automation, IT audit has helped a lot. Okay, so internal auditors are also involved in ensuring that the IT function of the company works well. They also deploy some IT tools. Okay, so IT audit could also fall under the domain of an IA. Okay, today we have the CARDs, computer-aided or assisted audit techniques. Skilled computer-based internal auditors will use these ones to assist the external auditors, okay, to ensure that they do their work sufficiently. Reports provided are reliable. They can validate their work, okay, using these cards, okay. External auditors will rely on their work because if they use the highest level of automation and digitization to do their work, of course, it makes life easy for the external auditors, okay. Options for providing an internal audit service whilst we wrap down. So there could be 4 basic options. In-house, use the staff within, or buy the services from an internal audit service provider. There are external guys who are specialists only in internal audit, or use a consortium or agency arrangement. And then again, use the right source, right sourcing, okay? Right sourcing means buying in services to supplement in-house resources. We have the guys, but let's buy some other guys to come and support, okay? External audit firms cannot provide internal audit services to their clients. Conflict of interest is not allowed, okay? Now, in-house, you get a guys in-house. What is the benefit? They will hold information that they have confidential. Information doesn't leak. They get to understand the company better, so they do their work effectively, okay? They have this better working relationship with the staff, okay, because they don't see these auditors and outsider, they see him as part of us, as part of the organization. He also has that shared commitment to ensure that the company achieves its objectives. And there's continuity of staff. What goes on? There are fixed costs, no hidden extra charges, because you know this guy will take his salary and his bonus or whatever. So we know it in our budget. It is also a service to organization, and it doesn't depend upon selling additional work, okay? And we retain the staff. Succession planning is there. So we know that we don't have a lack in our IA function, okay? And knowledge is retained within the organization, but there are drawbacks. There's lack of flexibility. When you bring an outsider, he can bring in some innovative ways for the work to carry on, to go on. Staff career progression is often difficult because you are stuck. If your head of department doesn't move, where will you go? You will still be there as internal auditor. And the head of department, where is he moving to? Unless he retires, okay? Cost of regular training or updating of staff, you always have to update them to their current needs. But if you pick an outsider, he will train himself. It doesn't need CPD cost from your end. Usually there are small numbers, and it means the skills that they have will be restricted. But if you use an outsider, they have a large pool of staff with more resource and knowledge base. The quality of service may deteriorate if we don't get new guys to augment the current staff, okay? Bring in fresh graduates who have a fresh mindset and they come in. Else you get the old guys stuck to the old ways of doing things, and they would always impede progress. There's also complete independence, could be difficult to achieve because you've been in the company for 10 years, 15 years. That is where you get your daily bread. So you may be tempted not to sacrifice the future of the company, because if you sacrifice the company, your daily bread is also curtailed. And there could be lack of available resources for small organizations to have an internal audit function. What if you get an internal audit agency or outside person who comes in other than an external auditor, okay? They are independent. The benefit is that they are independent from the organization, so they can work independently. You can't control them. There's no cost, like I said, in terms of training them, their CPD, no, they will train themselves. There's cross-fertilization of ideas because these guys come with fresh ideas from the sectors and from where they are coming from. They are flexible. Today it will not be Richard, tomorrow it will be a different guy. So they are flexible resources who come in and bring new ideas. Full access to technical expertise and other auxiliary or ancillary services, they will help you. And there's a flexible contract. You only get paid for what you do. So you don't have to pay them even when they are not working. But an internal person, whether he works or not, you pay him. The disadvantage with these guys is that the cost can be very high. They can also even take confidential information out if you curtail their contracts, okay? Their staff are not always on site. You have to call them to come on board, okay? The continuity of staff at junior level is less certain. There's loss of control of quality of staff provision. Confidential information could be out. And there could be constraints, contract constraints, or you only get what you have agreed with them. You cannot tell them to go outside the scope. They'll do what they've agreed to be paid for, okay? You can also use a consortium and agency arrangements, okay? The benefits are almost like the same as the outsourcing, okay, getting the external. So direct control over the service, that's a benefit. You tell them what this work wants you to do. There's also continuity of staff because, you know, it's an agency. You always get people, you sign a good agreement with them. Costs are restricted to the cost, the direct cost of the service. No profit element. What you do is what we pay you. Independence from individual members also applies. And there's the ability to share best practice. They come in with fresh ideas. The disadvantage is that there could be possible divided loyalties of audit staff. Okay. Control of resources. Who gets the best service? Ancillary services may still need to be bought because you've just agreed to buy XYZ services. Any extra you pay. Lack of flexibility, they could be very quite busy because they are just working with other agencies. Quality of services may also deteriorate over time if they don't get fresh guys to be providing to you. In flexible pricing, if budgets have been agreed, we want you to pay this and that's what you pay for that period of time. Again, the confidentiality of information, very key information, could be taken out and be sold out, okay, if these are not professional guys. Now, like I said, right sourcing, we have the staff within, but they're not enough. So let's get specialist skills who will come and second our staff within the organization. So it is very useful for audit reviews of technical or specialist areas. Let's say our internal audit guys are not good in taxation. Get a tax expert to come and augment, okay, fraud investigation, IT audits, okay, contracting. So we get these specialists, right sourcing, source the right skill to come in to support our staff. The major disadvantage of right sourcing is that specialist advice is not cheap, very expensive. Bring in a tax expert, he will charge you so much. An assessment of risk and value for money factors will have to be undertaken before you proceed with this option. Because you're not careful, this person comes for just 3 days and the money that you pay him is more than what you'll be paying 3 staff who will be with you for a year. All right. The reporting lines is always important. If the IA could have an independent reporting line, reporting to management is key, yes, but that should be administrative, a dotted line. But functionally, they should report to an independent body, okay? Usually an audit committee, okay? Now, the aim of every internal audit report is to prompt management action to implement certain recommendations to lead to change within the system to get the best results. The 3 E's, okay? And again, their report is to provide a formal record of points arising from the internal audit assignments and where appropriate, of agreements reached within the management. So that's what they want to do. We'll give you some recommendations. We want to follow up. What agreements have we reached? Have we been able to implement it? Okay. Sometimes they follow up on external audit reports, open recommendations to ensure that these are closed off. Okay. Now, they should be very clear and constructive and concise when they are writing such reports. Now, in internal audit reports, they should clearly state the purpose of the report, the scope of work they've done, and the extent of work they carried out. So they should clearly spell out the audit procedures, the audit approach that they used. Any findings should be clearly stated. Any conclusions, they should clearly state it, okay? Any recommendations they make should be relevant, should be appropriate, should be feasible to implement. And if possible, they should draft an action plan for the organization to follow through. Now, they should acknowledge the action taken or proposed by the team. Usually, you'll find internal auditors even assigning goal owners to specific work. So HR function, maybe payroll adjustment or remove staff who leave the company on timely basis. They assign the goal owner to the HR director, okay? So they will clearly specify this and write it in such a way that it's concise, constructive, not verbose. Don't put in so much words to confuse the person. Straight to the point, okay? Don't think you are favoring someone. Large reports are very difficult to read. People will not read it, okay? But plug in an executive summary so that managers will just browse through the executive read summary if they don't have the time to read everything. Internal audits should always have a term of reference. They design it within, agree it with the audit committee. Okay, of course, the senior management team will have access to these terms of reference and it guides their work. Now, their terms of reference should usually be who the report is for, the CEO, audit committee, whatever. Okay, they will surely keep some management staff in copy. The TOR should also look at specific instructions regarding the assignment they are going to undertake, restriction in the scope of work. If there is any restrictions, they should clearly state it. The format the report would take, who will receive what report, okay? And the timescales to produce individual reports and to follow up on those reports. Now, internal audit reporting can be a mixture of both formal reports or oral presentations at the board meetings. And an independent IA function will have its own schedule of work and reporting procedures. Like I said, draft your own audit plan, send it to your director, let somebody approve it, okay? And then you work. There are some questions I would love you to look at, page 325 has this case study on Shark Estates Agents Limited. Please take a look at it with the questions. Remember, your exams will typically be more of case studies, okay? Also, there's a self-testing, student self-testing questions. You get some of these questions appearing in your class test, okay? And then cross-check your answers with the core test. ACCA Chapter 9, there are some 3 test your understandings. Please take a look at those ones as well. All right. So I'm going to end here. It's 35 minutes from what I see, which is okay. It looks like we will still be crossing the 30 minutes mark. All right, friends, I end it here. All the best, and I'll see you when I see you. Bye for now.